Today, Bitcoin falling to its lowest level since May as a broad crypto sell-off takes hold. And Cory Klippsten of Swan Bitcoin weighs in on what's in store for crypto prices through year-end. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Major cryptocurrencies under pressure to end the week. As of noon Eastern, Bitcoin fell to just under $97,000, but at one point, it sank as low as $95,000. Ether and XRP, they both fell nearly 3%. Now, concerns surrounding Wall Street's AI trade have mounted this week, with the recent wipeout in once hot cloud stocks further spooking investors about elevated tech valuations. And then on top of that, mounting unease about the Fed's upcoming rate decision also added pressure to the market this week. Investors, they are counting on another rate cut next month to give the economy a boost, but some Fed members are growing concerned that inflation is too sticky to warrant another rate cut this year. All of this is happening as the U.S. government shutdown, which was the longest in history, finally ended on Wednesday evening after stretching on for more than 6 weeks. Turning back to the market and looking at the week, Bitcoin was down more than 6%, and Ether was lower by more than 6.5% at noon Eastern. Both Bitcoin and Ether are experiencing their third weekly losses in a row and their fifth negative week in the past 6. For Bitcoin, this is the first weekly close below $100,000 since early May. XRP was down about 1% for back-to-back weekly losses. And this morning, Strategy Executive Chairman Michael Saylor joined CNBC's Squawk Box, where he weighed in on this crypto sell-off. About 2 weeks ago, Saylor predicted that Bitcoin would hit $150,000 by the end of the year. This morning, he explained whether he still feels that way now.
There's an incredible amount of leverage coming out of the system, a lot of liquidation. A lot of the OG holders were selling at the $100,000 level, and so I'm fairly comfortable at this level. I would think that we'll build from this base and we'll rally from here. Obviously, it's hard to make a forecast for the end of the year right now, given what's happened over the past few weeks, and especially the shift in the macro environment. But, as you know, my view is Bitcoin's going to outperform gold. It's going to outperform the S&P. It is digital capital. And so if you're a long-term investor, this is the place to be.
All right, sticking with markets for our main story. I spoke with Cory Klippsten, founder and CEO of Swan Bitcoin, about what's driving the crypto sell-off. He also weighed in on the prospects for Bitcoin in 2026 and beyond. So, Cory, give us your view on this multi-day sell-off we're seeing in crypto. Is most of this tied to wider risk assets, or is there something inherent to crypto that you're watching right now?
Look, I think there's something micro right now, just kind of the last week or so, where there's a lot of uncertainty. But there's something broader that we've all been kind of looking at and wondering why this time might be different. And in particular, just for anyone that hasn't been following Bitcoin since inception, there have been these 4-year cycles where there was a bull market peak in each of 2013, 2017, 2021, and then a sell-off where the price never hit that level the following year. So the best price in 2014 was lower than 2013, the high in 18 was lower than 17, the high in 22 was lower than 21. And so the big question is, are cycles dead? And if they are, why would that be? Now, there's a newer hypothesis, which is actually dovetails with my own hypothesis. The newer hypothesis is that Bitcoin essentially sort of IPO'd at 100K. And I have anecdotal evidence for this that kind of supports it, which is that for some reason, that round number is something that's always been talked about in Bitcoin circles. Since I got into the space in 2017, it was always this number. People would say, like, how much of your stack will you sell when it hits 100K? It was just something that journalists asked. It's something we talked about. And you'd always have like a number that you might discuss, or you'd say, I'm never selling. But it does feel like that does have more psychological impact than maybe people thought, and that people that own a lot of Bitcoin from the early days that they bought in the double digits or the triple digits have been peeling off a lot of their stack and, one could say responsibly diversifying. I think that the more likely IPO was actually the launch of the ETFs in January of 2024. And that essentially from that point, you kind of saw a lot of the coming bull market pulled forward. So people got really excited and you saw a lot more of a price run up. If you think about 4-year cycles, you saw a lot more price run up in 2024 than you ordinarily would have. And so a lot of the growth basically was kind of baked in. I'll be honest with you, and I don't do price forecasts generally, and don't encourage trading and don't trade myself. I just buy automatically every single day and chalk up a win because I have more Bitcoin. I certainly had expectations that we would see something north of 150, maybe 180 by the end of this calendar year, and that looks pretty much off the table at this point. But I also think because we haven't had a big run up, the chance of a big crash of the magnitude that we've seen in previous cycles is also off the table. And I think the chances of seeing a higher high, so above 125K in 2026, is actually really high.
So Michael Saylor was on CNBC today, and he kind of brushed off the recent volatility, saying that it just comes with investing in crypto. We've also seen a rise in outflows for Bitcoin ETFs, but honestly, Bitcoin has been way less volatile than it has been in the past. And I'm wondering if you think that crypto's relative stability compared to years past will help keep institutions invested in the space rather than abandoning it.
Yeah, absolutely. I think everyone is a little bit more comfortable with, a steady climb, relatively up, single digits, maybe low 20s, 10s, something like that every year is nice and comfortable and forecastable. And, Bitcoin's history of going up 1,000% and then crashing 70 or 80% is not particularly appealing to institutional portfolio managers or institutional asset managers. So I think that thesis is very true. And I think you've just seen a lot more of the Bitcoin volume has come onto regulated trading platforms, especially if you also include kind of the paper products like ETFs and futures. It's just a lot more of the volume is in places that are harder to manipulate, and that was by design. And it's been tamed for good and for bad in some ways. And I think we're just kind of seeing that dampened volatility. The other thing is just law of large numbers. Obviously, it's a lot harder to make something go up 50% or down 30% if the asset is worth $2 trillion as opposed to a few hundred billion. So that's the other thing that's going on.
Talk to me about the dynamic of the digital asset treasury trade. It's been the big talker of the last few months, as we've seen pretty tepid flows in the spot crypto ETFs. So has this introduction of the crypto treasuries actually translated to more volatility in the crypto markets, or how big a role are they playing in the trade right now?
Yeah, so I think, first off, I think the crypto industry and kind of the Wall Street crypto firms trying to label them DATs was just another attempt to try to bring Bitcoin under the crypto umbrella after 3 or 4 years of successfully separating Bitcoin from crypto. They saw this Bitcoin treasury company or leveraged Bitcoin equity play kind of running away for Bitcoin and all these companies launching. And I think Lubin essentially realized that if he didn't have something to market like that, for Ethereum, then it would just get completely left behind. So they started a new narrative, and he put up all his own personal money. There weren't really any investors in that. It was just kind of putting Ethereum into the company, and then obviously paying Tom Lee a massive amount of money to front it, which was a big coup for them because he's always been kind of a Bitcoin-only guy and like a big Bitcoin bull. So, he basically got yachts for his great-great-grandkids taking the ETH money. But I think it was just manufactured and not real. As far as what probably matters, to most people, and I think to the world of finance and humans generally, I think there just hasn't been much new volume from any of these Bitcoin treasury companies. So the two biggest haven't closed yet, haven't made any purchases, which is the two Cantor SPACs. But all of the assets contributed were Bitcoin. So it wasn't fresh fiat going into Bitcoin for CEP or CEPO. And then the rest of them, so whether it's ProCap, Naka, Sequans, Empery, and Strive are kind of the 5 big ones that launched this year. None of them have been big buyers of Bitcoin. They're all very, very, very small. So there's just the impact has been negligible.
Now, you mentioned earlier that the idea of new highs for Bitcoin is off the table. So what should investors expect from their Bitcoin investment through year ends?
Yeah, so I don't think that a new all-time high is necessarily off the table. We've seen crazier things in 6 weeks and often toward the end of the year. So, could we recover 126 or something like that before the end of the year? Very possible. Again, my base case is that there's more than a 50% chance that happens in the next year. So sometime in 2026, I think we'll see a new all-time high. And again, that's just a function of us not having had a big price run up this year. Bitcoin has essentially been a stable coin ever since the election day last year. It ran up to 100,000 right after the election that same week, and it's sort of traded a little bit above or a little bit below in kind of the 75 to 125 range ever since. So that's kind of where we are, and there needs to be something new happen. It's got to be some of these, as they call them, OG sellers deciding that they've sold enough, and so there's no more selling kind of from the existing holders, or there needs to be some kind of new source of demand, whether that's just a shift in retail sentiment or institutional sentiment, or maybe even, again, nation state purchases is always on the table.
And looking ahead to 2026, what are the themes you're watching for in the crypto market? And is there anything that keeps you up at night that investors should watch out for?
So I'll answer the second part first. And I think in the Bitcoin space, there's nothing that you need to worry about. I think it's been in the clear for 11 years now from a regulatory standpoint. So there's nothing really that concerns me around Bitcoin. In the crypto side, I would say they're all basically waiting to see what they're going to be allowed to do legally. So they're still trying to figure out what the language is going to be in the Clarity Act, which is kind of the market structure bill that they paid for by supporting a bunch of election candidates in the last cycle. And so that's all being fought out, and we'll see what happens and where it lands. But you've seen the new chair of the SEC, who's extremely friendly to non-Bitcoin crypto, saying that they have ideas that they're going to lay out around which types of tokens are actually securities and which ones aren't, and they're going to try to clearly define exactly how something starts as a security but then stops being a security, et cetera, et cetera. And I think it's true that a lot of the established players that have been around for a long time on the crypto side actually want this regulation. It generally is good for the incumbent and the people with a lot of size to regulate and sort of pull the ladder up behind them so that they can sort of stop competition from coming in. As far as how people have generally made money in crypto broadly, they won't be happy. The same actors that have made money in crypto for the last 10 years, mostly through pump and dumps, it seems will have a lot of that activity kind of quelled and regulated out of existence. So, we'll see. It may be more than they bargained for, but I think by the way, I think that you're probably on a knife's edge as to whether the Clarity Act even gets passed by midterms. I think there's a lot of pushback, as you're seeing in the press, even from within crypto, and certainly from the Democrats, about all kind of the grift and crime that's arisen in the intersection of politics and crypto over the last year. So I think assuming that this is going to be a legislative priority and that there aren't going to be fights over it would probably be short-sighted. So there's a lot to keep the crypto people up at night, and they have to worry, and they have to be in DC, and they have to keep on spending money on lobbyists. But as usual, Bitcoiners just don't care, again, because there's no company that runs Bitcoin.
Okay, that's all for Crypto World this week, but we will be back again on Monday, and we'll see you then.